watching the Wealth Guard Show. I'm your host, Tom White. Wow, what a week it was. In case you missed it, on Tuesday I posted an update on the YouTube page from last week's video on Tuesday. And I also started a blog on the website, wealthguardshow.com. Make sure you visit the blog often. That's where I'm going to have midweek updates, because we certainly had an update this week. As when we last left you last week, it was looking all positive as the Dow Jones Industrial Average. It looked like it was kicking on all cylinders, entering into earnings seasons here. Then all of a sudden the bottom fell out of it on Monday and had a little follow through Tuesday, and then of course the rest of the week. I want to show you what we saw on Tuesday. We did get out of the market. Let me show you what happened. And for those of you who are regular watchers, I hope you caught this. On Tuesday, the Dow Jones Industrial Average, we got a change in our economic mechanics model, as down below 0.1, those stochastics gave us a cross, a negative cross, giving us a bullish, bearish signal as the black line crossed over the red. And we were looking for confirmation on 0.2 on those MACDs and the histogram bars. They were dropping, and the MACDs were converging, getting ready to cross. So what I did is I went ahead and looked at all 30 of the Dow Jones Industrial stocks, and I did a breakdown on each one of those stocks, and I only found 2 stocks that were looking decent on the charts. Everything else was giving sell signals or about to give sell signals. So I anticipated that those MACDs were going to follow through and cross. Also, on the weekly charts, we did get sell signals from the move on Tuesday, so that caused us to get out of the market. Here we see 0.2 again. Those MACDs were converging, histogram bars, we gave those yellow marks. And we had some resistance that we're bouncing off of up there on top around 12,700 that we hit back earlier in July. Relative Strength Index failed to take out its last peak too. It had a smaller peak and started declining, so we gave that a yellow mark. And so we went ahead and sold 22 shares of Walt Energy at $127.33, put it into cash. And we also sold 45 shares of New Skin Enterprises, $39.78, and 83 shares of the Bridgepoint Education at $26.69. That's the stock I warned you about last week, because they were selling some common shares that were not currently trading. So take a look at last week's show for a review on that. 20 shares of Biogen at $105 we sold to, and put everything into cash except for the mistake we made. We held on to 14 shares of the Carbo Ceramics, and we wanted to see what the earnings were on Thursday. Had to pay to see, right, and hold on to that, but that's a motion and that's a no-no, and made a mistake here as Carbo Ceramics just got clobbered, and it didn't matter what the earnings were. They were just getting beaten up and hammered, and we should have listened to the model, because the model told us to get out of the market. It was giving us sell signals and looking bearish, and we thought maybe we'd defy it. That's a mistake on my part, but we're still holding on to a 13.82% gain in the portfolio since January 28th, so we're still smacking the market even though we got clobbered this week. And now we'll review the rest of the week. And we review now the holdings going into this week. We're still going to get rid of the worst performer this week despite going into cash. And we started out with last week's winner, Bridgepoint Education, 83 shares at $30.50. And Carbo Ceramics, we held on to that stock, $180 going into the week. Biogen, $105.56, came in third place last week. And New Skin Enterprises survived the portfolio and starting the week out at $40.40. Walt Energy, the new addition to the portfolio, picked up 22 shares of that stock at $131.71. And we had a total of $12,168.78, or 21.68% gain in the portfolio since January 28th. Took a heck of a loss this week. One of these stocks, the worst performer, is about to get sold. Let's see how we did. And our number one performer this week, coming in first place, it's Biogen. And Biogen won first place this week, opening up at $105.56 and closing at $101.87. A total loss in the portfolio, or in the stock I should say, of 3.5%. Would have been a loss of $73.80 had we not got out on Tuesday. Let's take a look at the chart. And on the chart of Biogen, it looks like it's in the advanced stages of a decline here, and it looks like it may be starting to possibly try to find a bottom here. Down below 0.1, the stochastics are starting to reach oversold territory, and the black line's converging on the red. It's still negative, it's still in decline, so we gave it a red mark, but hopefully we get some improvement this week. And above that, point number 2 is still in decline on those MACDs, and the histogram bars are dropping, so we gave this a red mark. Up top, relative strength index is in decline. You can see the red line drawn down there. There's your trend. It's negative. We gave it a red mark. And our number 2 performer this week, coming in second place, it's Walt Energy. And Walt Energy, the new addition to the portfolio, opened the week at $131.71 and closed the week at $122.57. Total loss in the portfolio of just under 7%, or again in a stock, not the portfolio. Total loss had we held on to the stock throughout the week of $201.08. Let's take a look at the chart. And on the chart of Walt Energy, down below, point number 1, the stochastics, clearly a red mark here. As the black line crossed over red, they're in decline, they're negative, we gave it a red mark. And above that, point number 2, looks like we're going to get some confirmation in those MACDs here. We haven't yet. The black line's converging on the red, and the histogram bars are still dropping, but they're above 0, so we gave this one a yellow mark. And up top, relative strength index. You can see where we've been declining, and now we're leveling off a little bit here, right around the 50 baseline. We're going to give this one a yellow mark too. And our number 3 performer this week, coming in third place, it's Nu Skin Enterprises. And we open the week at $40.40 and close the week at $37.54. Total loss of just better than 7% on this one, or $128.70, had we held on and not sold on Tuesday. Let's take a look at the chart. And on a chart of Nu Skin Enterprises, if this doesn't say sell, I don't know what does. Point number 1, those stochastics have been nosediving, and they're still clearly falling. We gave this one a red mark. Above that, point 2, we got confirmation of those stochastics when the MACDs crossed, the black line crossed over the red and fell sharply. Histogram bars are dropping sharply too, so we gave that a red mark. Up top, relative strength index, falling out of the sky, gave this one a red mark. And that only leaves room for one more stock in this portfolio. One of the stocks is going to remain, and the other is going to get sold. The first stock up, it's Bridgepoint Education, last week's winner. Bridgepoint Education we warned you about last week as they were selling some more common stock. And the second stock, it's Carbo Ceramics. Now we held on to Carbo Ceramics and we wanted to see what the earnings were. Coming in fourth place. And remaining in the portfolio, it's Carbo Ceramics. And Carbo Ceramics opened the week at $180 even and closed the week at $156.07. A total decline in the stock of a little better than 13.25%. Would have been a loss of $335 in the portfolio. Actually, it was a loss of $335 in the portfolio because this is the one we held on to. Never should have done that. We should have listened to the signs. Let's take a look at the chart. And on the chart of Carbo Ceramics, can you say sell? Down below point 1, those stochastics are just completely falling down. They're negative. We've got to get out of this one. This is a red mark. And above that, point number 2, we see the same thing with those MACDs. They're confirming the move in the stochastics. They're dropping like a stone, and the histogram bars are just falling deeply. So we gave this one a red mark. And the relative strength index. There is no strength. This thing is as weak as can be. This is the relative weak index. This thing is in decline. We gave it a red mark. I don't know about this Carbo Ceramics at this time. And so Bridgepoint Education is out of here. And And starting out the week at $30.50, it closed the week at $24.76. Total loss in the stock of almost 19% on this one, or $476.42 had we held on past Tuesday, because we did get out of this one. Let's take a look at the chart. And on a chart of Bridgepoint Education, down below, point number 1, we see the stochastics are reaching into oversold territory, and we see some improvement here as the black line's converging on the red, but no sign here yet. We gave this one a red mark. And above that point 2, we still have confirmation in those MACDs as the black line crossed and they're still falling, and the histogram bars are still falling too, so we gave this one a red mark. Up top, relative strength index has been falling pretty sharply, and looks like it may be trying to make a little base here, but until it does something here, we got to give this one a red mark too. And our results this week: in first place it was Biogen with a 3.5% loss. In second place, Walt Energy, we had a loss there of just under 7%. New Skin Enterprises came in third place with just better than a 7% loss. Carbo Ceramics survived the portfolio with about a 13.25% loss. And Bridgepoint Education is out of here with just over 18, almost 19% on that one. We would have had a total loss of $1,215.02, or almost 10.25% on this one, had we held on to the stocks this week. It's a good thing that the economic mechanics gave us a warning signal ahead of time that we could see, and hopefully you caught that too early on if you're watching. Be sure to tune in on the show often. Going to have this on the blog, and if you check out the website, wealthguardshow.com, there'll be updates there throughout the week from now on. And I'll also try to get them on the bottom of YouTube here if you're watching on the YouTube channel. And every week we get a new stock in the portfolio here, and as you can imagine, we're not going to do a stock this week. We're going to hold on to the cash this week as things are still looking volatile. We're going to wait till we see some evidence that the stock market's going to come back, and we're not going to try to hit the bottom, and we're not going to try to hit the top, but we want to make certain that the evidence is stacked in our favor. So if we get indications that we got to turn around, we get confirmation in stochastics and MACDs, then maybe we'll consider getting back into the market. But for now, it's going to be just cash. And we've done this before. What we're going to do is we're going to still monitor these 4 stocks here, and we're going to still sell the worst performer or bump the performer from the portfolio next week and be left with 3 stocks. And at that point, hopefully things turn around and we'll introduce 2 new stocks to the portfolio, or else we'll hold on to cash again until we get that confirmation. But anyway, we're going to be looking at Biogen this week, starting out at $101.87. Walt Energy at $122.57, and New Skin Enterprises $37.54. Carbo Ceramics hammered us this week, starting out at $156.07. This thing better turn around fast. Got cash at $280.93 that we were holding prior. Holding on to that cash position too from Bridgepoint Education at $2,224.80. We're still up 13, almost 14% in the portfolio because we got out on Tuesday. We took a big hit as we were up almost 21% last week. And coming up, it's our economic mechanics from this week, and you're not going to want to miss this one. We'll take a look at the U.S. dollar, what's going on there, as well as the commodities markets, 10-year Treasuries, and of course the stock market. We'll let you know what to expect. We'll have your complete forecast and more. But you know, these stocks, they've got to perform or else they're out of here. And we look now at our economic mechanics from this week. And what a week it was. And for those of you who watch the show, you know that this portion is based upon 3 key principles. And first, the US dollar and the commodities, they move in the opposite direction. And secondly, the commodities and interest rates, they move in the same direction. And of course, high interest rates are bearish for stocks. And we'll begin with our US dollar. And on the daily chart of the US dollar, down below 0.1, you can see we're looking a little bullish here on those stochastics. Looks like they bottomed out here and they're starting to rebound as the black line crossed over the red. And it's giving us a bullish signal, but I want to see it cross over this 20 line to give us a little further strength here. So we gave it a yellow mark. And above that, point number 2, it looks like we may be basing here on those MACDs as the black line looks like it stopped dropping here. And the histogram bars are on the rise too, but they're still negative, so we gave it a yellow mark. Up top, relative strength index, we see too, that's got a little tail on it here as it was going a little higher here. Looks like it established a base, went a little higher, and I don't know if we're going to come down on this one or move a little higher, but for now we gave this one a neutral yellow mark. And on the weekly chart, here's where we see a little trouble. Down below 0.1, the stochastics, they're negative here. Down below we see that the black line crossed over the red, and they look like they're getting ready to make a sharp decline. We gave this one a red mark. And above that, point number 2, we see that the MACDs, they look like they're giving up a little bit of steam here, and the histogram bars are dropping toward that 0 line. So we gave this one a yellow mark. And up top, relative strength index, point number 3. It looks like it's just trending sideways right now. There's not really a lot going on here, so we gave this one a yellow mark. And summing up the US dollar, we analyzed the daily charts and the weekly charts. And on the daily chart, the stochastics, the MACDs, and relative strength index were all neutral, and we gave them a yellow mark. On the weekly chart, stochastics were negative. We gave them a red mark here, and watch out for those because they look pretty negative there. They look like they're ready to take a big dive. MACDs and relative strength index weren't confirming that yet though, so we gave those yellow marks. And for a total, we had 1 red mark, 5 yellow marks, and 0 green marks. And we look now at the commodities represented by the CRB Index. And on a daily chart of the commodities, here's what a sell signal looks like down below 0.1. Those stochastics, they've been trending downward and now have clearly moved down in a negative position here. As the black line crossed over the red and they're continuing to look like they're going to dive. And point number 2, the MACDs have confirmed that action as the black line crossed over the red and the histogram bars fell below the 0 line. That's bearish. We gave this one a red mark. And above that, point 3. Relative strength index has fallen below that mid 50 line here, and it's looking like it's wanting to go a lot lower. We gave this one a red mark too. And on the weekly chart, it's like everything else. Everything is good until it's no longer good. And down below 0.1, those stochastics are looking like they're giving up here. They were positive, giving us a nice bullish signal last week, but is now looking like they're converging together. We gave it a yellow mark, a little caution. Above that, point number 2, the MACDs. They look like they're settling in here, and the histogram bars are rising toward that 0 line, so we gave it a yellow mark. And up top, relative strength index, it's looking like a head and shoulders pattern here, but it's really a sideways action. We gave this one a yellow mark too. And summing up the commodities, we analyzed the daily chart and the weekly chart. On the daily chart, things were not looking good at all. Stochastics, the MACDs, and the relative strength index were all negative. We gave them a red mark. On the weekly chart, it looks like we had bullish signals last week, but we're giving it a little up here as the stochastics, the MACDs, and relative strength index were all neutral. We gave them yellow mark. So for the commodities, we were split. We gave them 3 red marks and 3 yellow marks with 0 green marks. And we look now at the 10-year Treasury yield. And on the daily chart of the 10-year Treasury yield, what do you know? It looks like the commodities down below 0.1, those stochastics are giving us a sell signal here. And they're starting to fall, so we gave this one the red mark. That's confirming the move in the commodities as they move in the same direction. And above that, point 2, we said we got confirmation of those stochastics in addition. So we got the black line crossing over the red on those MACDs and the histogram bars falling below 0. Gave this one a red mark. And you see too, we also broke some support there right around 20 as we fall into a new low here on interest rates. New short-term low anyway. And above that, point 3, we see that we've got a dive here in the relative strength index. It appears to be heading lower. We gave that a red mark. And to look now at the weekly charts, down below 0.1, the stochastics. We had a bullish signal a couple weeks ago, and now we are getting a bearish signal as the black line turned and crossed over that red and starting to fall. We gave it a red mark. That's why we like to see a decisive move above the 20 line before we really turn from yellow to green. Above that all, point 2, the MACDs and the histogram bars. MACDs are still declining, but the histogram bars are climbing a little bit toward that 0 line, so we gave this one a yellow mark. And up top, point 3, the relative strength index is trending lower, and it's heading toward that bearish territory, so it looks like we're heading lower again on this. Gave this one a red mark. And summing up 10-year Treasury yield, we analyzed the daily chart and the weekly chart. On the daily chart, we found the stochastics and the MACDs and relative strength index all negative, and we gave them a red mark. And on the weekly chart, stochastics were negative, we gave them a red mark, but the MACDs were neutral, so we gave those a yellow mark. Relative strength index was negative, we gave that a red mark. For a total, we had 5 red marks and 1 yellow mark with 0 green marks. Somebody out there, I don't know who or why yet, is going to be buying our treasuries. And we look now at the Dow Jones Industrial Average. And early on in the show, I showed you the daily chart up until Tuesday when we got the sell signal in the Dow Jones, and this is what we looked like for the rest of the week as we finished out on Friday. Down below, those stochastics continued to decline into negative territory. We gave it a red mark here. And above that point, too, we see that the MACDs confirm that move in the stochastics, and the histogram bars have been declining too. We gave this one a red mark. And up top, relative strength index has been trending lower and is also diving lower, so we gave this one a red mark. And a look at the weekly chart. This one changed on Tuesday when we had the drop in the market here, and we were able to see some sell signals across the board. Down below, 0.1, the stochastics, got the black line crossing over the red here, and it's dropping lower. We gave this one a red mark. And above that, point number 2, we got confirmation as the MACDs deflected off each other here, and black lines moving away from the red, and the histogram bars are dropping further too from that 0 line. We gave this one a red mark. Up top, we see where we've got the downward trend on the relative strength index, point number 3 there. And it's also starting to drop lower toward that 50 line, so we gave this one a red mark too. And summing up the Dow Jones Industrial Average, we analyzed daily chart and the weekly chart. On daily chart and the weekly chart, we found the same thing. The stochastics, the MACDs, and the relative strength index were all negative and giving us sell signals, and we gave them a red mark. Now, things do look like they could improve on the daily chart probably Tuesday or Wednesday if we bottom out on those stochastics, so we're going to watch out for that. So keep an eye out on the blog for any changes in midweek, because these things don't just change on Saturdays at the end of the week when I do the show. And so we've been coming up with scores for the US dollar, the commodities, the 10-year Treasury yield, and the Dow Jones, looking for where the strengths are and where the weaknesses lie. We did that by weighing the number of positives against the number of negatives and coming to a conclusion that way. And in first place this week, it was the US dollar, as we had 0 green marks, but we had 5 yellow marks and 1 red mark. That's a big improvement over last week when the US dollar was looking bearish. And coming in second place this week, it was the commodities. They are dropping a bit here. We got 3 red marks, 3 yellow marks, and 0 green marks on that one. And in third place, it was the 10-year Treasury yield, as we had 5 red marks with 1 yellow mark and 0 green marks. And in last place, it was Dow Jones with 6 red marks. And we take a look now at our market gauge. The object here is to be as far in the right column in bullish territory as possible and as far away from the left column in bearish territory. And in this week, first place, it's actually the 10-year Treasuries, the prices that is, because money is flowing into Treasuries, which is driving the yields down. That came in first place here as it's benefiting from a declining stock market. In second place, it's the US dollar, also benefiting from the stock market and pushing commodities down further. As commodities came in third place, it's looking between neutral and bearish. We were split on this one. 10-year Treasury yield, that was heading lower too. And so last week when we left you, we had commodities moving bullish, and the 10-year Treasury yield was following the commodities. And I made a mention that I hope that the commodities were moving into bullish territory and not going the other way. And unfortunately, it turned out that way as they're heading lower. Dow Jones Industrial Average knows something about heading lower here, as it's in last place and still looking bearish. We're going to look for a small bounce this week. We're going to be very cautious on that. We're going to look carefully for confirmation because the weekly charts are turning and they're looking very negative here. So just because we get a short-term move in the daily chart doesn't mean that's going to change the longer term on the weekly charts here. So we're going to wait to get in. We're protecting a 13.5% gain here in the IBD 50 portfolio. No need to throw that out there in a declining market, so we're going to wait for that confirmation. Stay tuned to the blog for that, because we could possibly get in during middle of the week here. Well, that's all from our show this week. Tune in again next week and we'll do it again. Also, check in frequently on the blog and also on the YouTube channel, if that's where you're finding it too. I'll post information as things change. But for now, I'm out of here.